Hello, ladies and gentlemen. Today, we want to look at investments that thrive in the face of inflation. As a finance hub, we intend to use this video to educate and inform both experienced and prospective investors on issues and facts around investments that can be leveraged on during inflation. Therefore, we request that you all stick till the end of this video. Let's get started. But before we go ahead, please subscribe to this channel and share this video. Thank you. Imagine this. You've spent years saving, investing, and planning. You've budgeted wisely, built a portfolio, maybe even dreamed of early retirement. But one quiet force creeping just beneath the surface has the power to undo it all without ever making a sound. It doesn't crash like a market or explode like a recession. It creeps, lingers, and devours. That force is inflation. In recent years, we've all felt its sting, from rising grocery bills to soaring rent and fuel costs. And in times of global uncertainty, pandemics, wars, economic shocks, this hidden threat grows stronger, threatening not just our wallets but our financial futures. But here's the good news: inflation doesn't have to win. Because throughout history, some investors didn't just weather inflation, they came out stronger. They found the right strategies, the right assets, and the right timing. And today, you're about to discover exactly what they did. So buckle up, because in the next few moments, we're diving deep into a playbook of inflation-proof investments, backed by history, driven by analysis, and built for the uncertain times we live in now. This isn't just about protecting wealth, it's about positioning yourself to thrive when others panic. There are few phrases more chilling to a saver or investor than rising inflation. It lurks like an invisible thief in the economy, silently eroding purchasing power, gnawing at retirement savings, and unsettling even the most diversified portfolios. And in uncertain times, whether triggered by pandemics, geopolitical unrest, supply chain shocks, or central bank policy missteps, inflation tends to strike hardest and fastest. But here's the twist: not all is lost. In fact, times of inflation have often revealed unexpected opportunities. The key is knowing where to look. To understand how to fight inflation, we must first know what it does. Inflation is the rate at which the general level of prices for goods and services rises, subsequently decreasing the purchasing power of currency. Let's go back to the 1970s, one of the most turbulent inflationary periods in modern history. The U.S. experienced double-digit inflation, peaking at 13.5% in 1980. Savers who left money in cash or low-interest accounts saw their real wealth diminish by half in less than a decade. Fast forward to 2022 to 2023, when inflation surged globally due to supply chain disruptions, massive stimulus spending, and energy shocks. Consumer prices in the U.S. climbed by over 9%, the highest in 4 decades, before interest rate hikes slowed things down. But millions had already felt the sting in groceries, rent, and fuel. The lesson? Inflation doesn't just rise, it ravages. So how can investors shield themselves from this stealthy predator? 1. Treasury inflation-protected securities tips. Imagine a bond that adjusts its value based on inflation. That's tips. Issued by the U.S. Treasury, these securities increase in principal as inflation rises based on the Consumer Price Index. While the yield may seem modest, the real value is protection of purchasing power. Tips are ideal for conservative investors who want stability amidst economic storms. Historical insight. During the 2008 financial crisis and the post-COVID inflation run-up, tips became a haven for investors fleeing volatile markets. 2. Real assets, gold and precious metals. Gold has been called the currency of last resort for a reason. It thrives on fear. In times of inflation, currency values tumble, but gold tends to climb. In the 1970s, when inflation averaged over 7% per year, gold soared by more than 1,300%. Again in 2020, when fears of inflation loomed amid stimulus packages, gold touched record highs above $2,000 per ounce. Silver, platinum, and palladium also hold value during inflationary spikes, though they are more volatile. Cautionary note: precious metals don't generate income like dividends or rent. They are a store of value, not a growth vehicle. 3. Commodities and natural resources. When inflation rises, so do the prices of raw materials. Think oil, wheat, copper, and even lumber. Owning commodities directly or via ETFs like DBC or GSG offers a direct hedge. You're essentially investing in the very items whose rising prices define inflation. Example, in 2021, oil prices surged from $50 to over $100 a barrel due to global supply constraints, doubling the profits of investors in commodity funds. 4. Real estate and rights. Real estate is perhaps the most time-tested hedge against inflation. Why? Because as prices rise, so do rents and property values. This makes both direct ownership and indirect investments through rights, real estate investment trusts, powerful tools. Rights, which trade like stocks, offer liquidity and consistent income, often outperforming during inflationary spikes. Historical context: during the inflationary 70s, real estate values in the U.S. tripled. Even in recent years, amidst inflationary fears, rights that focused on industrial and residential properties delivered robust returns. 5. Dividend growth stocks. Not all stocks thrive during inflation. But dividend-growing stocks, particularly in sectors like utilities, consumer staples, and healthcare, offer dual benefits: income and inflation-beating capital growth. These companies often have pricing power, meaning they can pass rising costs on to consumers without shrinking margins. Example: Johnson & Johnson and Procter & Gamble have increased dividends for over 50 years. In inflationary years, they've consistently outperformed the broader market. 6. Inflation-resistant cryptocurrencies. Here comes the controversial contender. Bitcoin and other cryptocurrencies have been touted as digital gold, a new age hedge against inflation. The logic: limited supply, e.g., Bitcoin's 21 million cap, creates scarcity similar to gold. But history has been mixed. In 2022, Bitcoin crashed even as inflation peaked, raising questions about its role as a reliable hedge. Verdict: crypto might offer diversification, but it's a high-risk inflation shield. Treat it as a speculative asset, not a guaranteed protector. 7. International exposure and emerging markets. When the dollar weakens, a common byproduct of U.S. inflation, foreign investments can offer relief. Emerging markets, especially those rich in natural resources, can outperform in inflationary environments. Historical glimpse: in the early 2000s, as commodity prices rose, emerging markets like Brazil, Russia, and India saw tremendous growth, partly due to their export-driven economies. 8. Alternative investments: art, wine, and collectibles. Yes, even fine art and vintage Bordeaux can protect against inflation. These alternative assets don't move in sync with traditional markets, and their values often increase over time, especially when the wealthy seek safe havens. Fun fact: during inflationary periods, Sotheby's and Christie's often report record-breaking sales, as rare collectibles become more desirable. Now the big question: how do you craft an inflation-resistant portfolio? This is the million-dollar question. How do you put this all together? A well-balanced inflation-proof portfolio might include 20% in TIPS or I bonds, 15% in commodity ETFs, 20% in real estate or rights, 25% in dividend growth stocks, 10% in precious metals, 5% in international emerging markets, 5% in speculative assets like crypto or collectibles. This diversified approach doesn't just guard against inflation, It positions you to capitalize on it. Final thought: the best time to prepare was yesterday. Inflation doesn't send a warning before it strikes. It creeps in slowly at first, then all at once. The past few years have reminded the world of its power to reshape economies, destabilize markets, and stress test portfolios. But with the right mix of assets, guided by history and sharpened by strategy, investors don't just survive inflation, they thrive through it. Don't just protect your wealth, position it to grow in the storm. Now is the time to inflation-proof your future. Because in uncertain times, the smartest investment is in foresight. Thank you all for sticking till the end.